What's up everybody? Welcome to the Stocks channel. My name is Cory and today we saw a very bullish day going up across the board in the stock market with the tech sector leading the way. Is the tech sector finally looking bullish? We'll try to answer that question tonight. So first up, let's take a look at the NASDAQ 100 QQQs ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so tonight we're going to do something a little different and we're going to go through bear bull scenarios. We're going to still talk about bear scenarios because we still have the NASDAQ 100 in a downtrend. All of the other indices are hitting price targets, which means they're due for corrections any given day. So while I'm not bearish on the market and we're still going to let the price action do the talking, I want to prepare you for both scenarios. So on the QQQ's daily chart, we did see the price action going up 2.3%, which was a price action close over the 50 EMA. No matter how you look at it, a price action close over the 50 EMA is always the start in the right direction for a bullish scenario. However, we have to remember that the price action is still trading below a negatively sloping 20 simple moving average. The 20 simple moving average is usually called the momentum moving average, and we don't want to see the price action below a negative sloping 20 simple moving average in a bull market. So looking at the chart, remember that the QQQs are still in a downtrend. The 5 EMA is still below the 13, and the 13 is still below the 50. These moving averages are currently stacked to the bear side, meaning we still have a downward trend. If you followed me for any amount of time, you know that the trend is our friend and we never want to go against the trend. So while we did have a nice price action day today, and it does look like we're starting to break out of our downward trend line, we're still in a downtrend until we break out of it. So the best way to play this market is cautiously optimistic and defensive. It's okay to think that the QQQs are going to new all-time highs or that they're going higher from these levels, but you still need to have an exit strategy in case it turns against you. So remember on the QQQs, we were watching this ABC correction, and there's two possibilities after we have an ABC correction. We could start impulsively moving to the upside and going back into a bull market, which would bring us to brand new all-time highs. However, the other scenario is that we get this extended wave C and we're actually going much lower, but we just don't know it yet because we haven't started back into the downtrend. So to keep this in perspective, we're still in a downtrend on the QQQs until we break back above the 20 simple moving average and we see some of these moving averages cross back to the bull side. In a bear scenario, we would get an extended wave C and we would see the price action start creeping back down towards 280. So if the C leg of the ABC is not quite over, we really only just completed wave 1 and now we're completing wave 2 and we're still going down in a wave 3, 4, and 5, which would bring us to at least 280. So don't forget, there's still a bear scenario and it's really hard to imagine a bearish scenario like I'm drawing here on a day like today. But don't forget, we're going to talk about why we could be going into corrections in the other indices as well. So I'm not leaning towards the bear or the bull scenario at this point in time because it's very obvious on the other indices going to brand new all-time highs that they're currently bullish. My biggest concern with the QQQs is that we're still not breaking out of this downtrend while the other indices are meeting my price targets and going to new all-time highs, which is usually the landscape that they're ready for a correction. So if the NASDAQ 100 QQQs are already in corrective territory and could go lower, and the other indices are hitting my price targets and at all-time highs and are due for corrections, you can see how all of these scenarios come together, and it's actually a larger term bear scenario for the entire stock market. Again, we're going to let the price action tell us which one of these scenarios plays out, but we definitely want to be prepared for both of them, and we don't want to get caught blindsided. So next up, let's jump over to a 1 hour chart of the QQQs and let's analyze the price action that we saw today. We definitely saw a breakout of the resistance trend line, so I've now turned it green because I'm looking for that level to possibly act as support. We did find resistance right around that 319 and 320 level, and we did close lower for the day. So right now, right around 320 is still going to be resistance, and if we break over that level, we do have another resistance level just above at 322. To the downside, we're looking at possible support levels as 316 and 314. If we break down below 314, we're looking for a retest of 311, and if we break down below 311, we're going to start leaning towards the bearish scenario. So the bearish scenario means we could go much lower. So right now, the most critical support level I want you to pay attention to on the QQQs is going to be 311. Above 311, you can take on risky trades, but below 311, you want to look for more bearish scenarios and you maybe want to take more bearish trades. That's the way I see this market currently, and that's the way I'm trading this market. Above 311, I'm willing to take on risk, but as we continue to blast down through support levels and we approach 311, I'm going to be getting more defensive and more bearish. But we don't want to be bearish if these support levels are holding up. So if we come down to 314 or the resistance trendline breakout, and we start to bounce, I'm now looking for bullish trades and a possibility of coming back up towards 322. Remember, if we take out this high after a bounce, that's the all clear signal that we're ready to go long on this market. We would enter somewhere on this bounce and we would have an exit strategy below a breakdown of this support level. That's going to give us the best probability of success trading to the long side. Once I enter that trade, I'm in that trade until support breaks down. It's very possible the market just starts running after this scenario and we never see these prices again for a very long time. So we still are prepared for a bull setup, but if we start breaking down below support and we don't even see the support level holding up and we go into free fall, that's going to make me a lot more bearish on this market. Now this could also look something like this, where we break down, come back up to retest that level as resistance, and then continue the downtrend and take out this lower low. So at this point, we're still at a crossroads, but we are still leaning towards the bullish scenario. There's no doubt that we broke out of that resistance trend line, and we're very close to coming back down and testing support to see if we bounce and start breaking higher. So I know a lot of you are struggling to be patient in this market, but we're really only a few days away from knowing which direction this market wants to go. It's much better to be patient and be on the right side of the trade than it is to try to guess and be on the wrong side of the trade losing money. So I'm going to continue to tell you to be disciplined and be patient, and let's just wait for the confirmation of the direction of the trend. So jumping back over to the daily chart, just remember that we're still on a downtrend. All of the moving averages are still trending to the bear side. And until we break back above this 20 simple moving average, we're not getting too bullish on the tech sector. But don't forget, we're making steps in the right direction for the bulls, and the close over the 50 EMA is definitely a step in the right direction. I'm still going to be giving hourly updates on the Stocks Channel Discord every step of the way. And once I finally see the confirmation of the bear scenario or the bull scenario, I will sound the alarm and let you know which direction I'm expecting the market to go. Right now, we're just trading the chop and the volatility and taking what the market gives us. On the S&P 500 SPY ETF, we went up a little over 1% today. And at one point today, intraday, we were trading all the way above 395. So the S&P 500 is looking very bullish, and we did get a brand new all-time high on closing prices. Don't forget about that price target at 393, which we did close above today. We're going to have resistance at the previous intraday high right around 394. But if we break over that level, the next price target is way up here at 404. So from today's close to that price target is about 2.8% higher, but we still need to get a confirmation close over 393 for 2 days in a row. If you remember back here in the beginning of February, we never actually got a confirmation close over that level, and it was a strong resistance level that actually helped trigger this correction. So it's super critical to remember that we are at all-time high territories that caused a sell-off the last time we were here. Doesn't mean we can't break over it and go towards 404, but it does mean be defensive, because it's possible that we do trigger another correction and another sell-off at these levels. Now the good news for SPY is this was the second day in a row that we closed over the 20 simple moving average. We see some bullish momentum picking back up, which is definitely good for the bulls that we're getting back into a bullish trend. So we want to see the trend going in the direction of the trades we're making. So if we're getting a bullish trend on SPY, we want to be looking for bullish trades now, because we're looking to buy the dip off support levels and follow the trend, which is going to start pushing price action higher. If we start to see drastic selling off these levels and we break down below the resistance breakout, which is now around support levels of 389 to 388, that's going to give us more bearish probabilities that this was a false breakout. So I need to jump over to a 1 hour chart to show you what I'm talking about. And don't forget, there's still the scenario where we break out, we come back to test that breakout as support, and we fail to hold up and we start flushing back down to the downside. In the bull scenario, we want to see a retest of support around 389, a confirmation bounce, and we want to take out the hourly higher high. This is the same scenario we're looking for on the triple Qs, so the same exact logic applies here. To the bear side, we would fail to break out to new all-time highs, reject the resistance level and head lower, and that would tell us to expect lower prices and a reversal of the bull trend to go back into a bear trend. This scenario is likely going to play out if we see the tech sector further that extension of wave C and go down towards QQQ levels of 280. So while the market felt very good today and everything was going higher and everybody was trading to the long side making money, that doesn't mean that we're out of the woods just yet. There's still bearish probabilities that we go lower. So just remain defensive and make sure you're looking at both sides of the trade to understand that you're on the right side of the trade. So on SPY ETF, I'm definitely more bullish than I am bearish as long as we hold up above these levels around 388. If we start breaking down to 384 and that level fails to hold, the critical support level on SPY is now going to be 381. If we break down below 381, that's going to be a very bearish sign, and it could mean that we're going to trigger a much deeper correction this time around. So these support levels are extremely critical around 388 and 384 because it means we could retest the critical support level at 381. Now to the upside, if we start blasting through 394 and continue to head higher, that's going to increase the probability that we're going up to our price target at 404. So those are the two scenarios I want you to pay attention to on SPY. And if you're watching these levels I'm giving you very closely, you should be well prepared to trade either market. You just need to wait for the price action to confirm which market you're going to be in. On the Dow Jones ETF, we also had a bullish day, going up about 0.62%. And intraday, we did get very close to testing my price target around 327. You can see we're trading above the Bollinger Band, so there's no surprising to see some cooling off and some selling because we are getting a little bit overextended. So I wouldn't be surprised to see a pullback on the Dow, and possible support levels are 322 and 320. If we break below 320, we're looking for a retest of the 20 simple moving average around 316. As you can tell from the Dow, it's extremely bullish and we're already in a very strong bull trend. The price action is well above the upper Bollinger Band as well as a very positive sloping 5 EMA. The only question is, did the Dow Jones go too far too fast and it's ready for a pullback? So watch the price target at 327 very closely. If we can close over that, I do have another price target that's all the way up here at 336. Now remember, 336 is only a valid price target if we can get a close over 327. So as you can tell from today's price action, we do see the sector rotation starting to favor tech yet again, with the tech sector going up more than the rest of the indices. It was very oversold and it could still be a relief rally before further downside, so remain defensive. As you can tell from my price targets, the Dow Jones and the S&P 500 are hitting their price targets to the upside. That means they could be due for a correction at any time, which is also going hand in hand with a continuation of a tech correction. So there is definitely reason to consider bear scenarios at these levels and don't get overly bullish just because we're currently at all-time highs. On the Arkk ETF, we went up over 6% today and we closed over top of the 13 EMA. If I switch this over to a 1-hour chart, you can see that we haven't quite broken the resistance downtrend just yet, but we are currently testing that level as of the close. So the question on Arkk is this resistance trend line going to suppress the price action and we're coming back down towards support, or are we going to get a confirmation breakout on the Arkk ETF? So back to the daily chart, the support levels you need to watch are at 125 and down here around 117. To the upside, we're at that resistance trend line, which is right around 128. We also have the 50 EMA, which could be resistance around 133, and our resistance level just above that, which is also coinciding with the 20 simple moving average, right around 135. So there is a ton of resistance still on Arkk, but if it can start breaking out of this downtrend, that will be positive indication that it could be going back into a bull market. On the VIX, which is our fear indicator, we did drop 2.88% today, and we did bounce off of that support level right around 21.5. Remember, the VIX is a fear indicator, so if it's going lower, it's increasing the probability odds that we're going to brand new all-time highs. So if the VIX starts breaking down below 21.5 and heading down towards 20, that's going to be a very bullish indication and will actually give us more bullish probabilities that we should expect higher prices. If we see the VIX bouncing off of this level and going higher, that will increase the probability that the correction could be coming and we're going to see continuation of selling in the tech sector. On the US dollar, we continue to see weakness and we're back down to the 13 EMA. That's no surprise after this parabolic move, and it could just be cooling off before it gets ready to head back higher. We see bullish trending building up, so it's not too early to see the dollar continue to strengthen, which could eventually start putting some stress on the stock market. On gold, it looks like we continue to slowly trend up towards our price target at $17.61. On silver, we're cooling off a little bit, but the price target is still above at $26.56. On Bitcoin, we're looking really bullish, and remember that I said Bitcoin could very well predict the future in the stock market. So the longer Bitcoin's looking bullish, it's increasing the odds that the stock market, and specifically the NASDAQ 100, are going to go back into a bull market. However, I have to give you my bear scenario as well, is Bitcoin is also getting very close to my price target, which should be a brand new all-time high right around $59,000. Remember, that could trigger corrections and we could see selling in all of these indices at the same exact time. I'm not trying to scare you by talking about corrections, I'm trying to prepare you for what could come. If all of these indices and markets are hitting critical price targets, that could easily trigger corrections across the board. So the tech sector is still in a correction, and Bitcoin, the Dow Jones, and the S&P 500 are all hitting all-time highs. Also add in that the Russell 2000 is hitting all-time highs and price targets as well, and we could easily see how a correction could be right around the corner. Now don't forget, if we break above 59,000 on Bitcoin, I still do have one more outstanding price target that I think we could reach, which is at $62,500. We're still on a bull trend with bullish price action, so we're still bullish on Bitcoin until we see something change in the price. On Amazon, we went up 1.83% today, and we did blast through one resistance level at 30.90. We're still trading below a negative sloping 20 simple moving average, and the 20 simple moving average has crossed below the 50 EMA, and they're both negatively sloping. So don't forget that that is a bearish trend, and I'm not expecting to see Amazon going to new all-time highs anytime soon. We still have a lot of resistance levels to break above, around 3140 and 3150, and we still have to break and close back over the 50 EMA at 3170. Downside support levels are still around 3030 and 2950. On Tesla, we continue to see a bounce, going up 4.72% today, but we're still trading below a negatively sloping 20 simple moving average and 50 EMA. The 20 simple moving average crossed below the 50 EMA just like we saw on Amazon, which means we're crossing into more bearish territory and we could see much lower prices. So if Tesla can't get back over the 50 EMA soon, which is right around 718, and close over it, don't expect to see higher prices in the stock market while these big tech names like Amazon and Tesla are in bear trends. This is without a doubt a bearish trend with bearish price action, and until we break and close over these levels, we can't get bullish on Tesla. Remember, on this channel, we follow the price action and we follow the trend. You can't look at this and be bullish until we see a reversal in the trend and some bullish price action. So right now, I'm looking at resistance levels on Tesla right around 707 and 718, with downside possible support levels around 680 and 618. On Apple, we went up 1.65% today, but again, we're still on a bear trend. I'll save you the details because they're the same as Amazon and the same as Tesla. All these moving averages hint towards lower prices, and I still have a price target on Apple around 114 until we break the bear trend. Upside resistance levels are 124 and 126, with the 50 EMA being at 127. On the financial sector, we went down about 0.25% today, but we're still trading over top of the 5 EMA with a very healthy and strong bullish trend. On the industrial sector, we were relatively flat today, but the price action is trading above the 5 EMA with a very strong bull trend. On energy, we were also flat, but we're still maintaining bullish price action with bullish trending. On healthcare, we went up 0.61% today, and that is a price action close over top of the 50 EMA as well as the 20 simple moving average. We still have bearish trending, but the price action is well on its way to reversing the trend if we continue to go higher from here. So did healthcare bottom and it's ready to go back into a bull market? We should know very soon. So going back to the S&P 500, there's no reason to get bearish on this market just yet. We still have a lot of strong sectors, and we're definitely seeing a bounce in healthcare and tech. I want you to stay cautiously optimistic about this bull rally because we are hitting critical price targets at brand new all-time highs, and there's still some sectors and some indices that are due for a correction. I'm not calling for a correction, I'm just saying that corrections could come at any time, and normally corrections come when nobody's expecting them. So be defensive and be disciplined, and more importantly, be patient and let the price action confirm what we're going to do over the next couple of days. I could very possibly see volatility coming into next week with the VIX at very critical support levels and possibly due for a bounce. So just be defensive and be flexible and be prepared for any scenario. Don't forget, on the Stocks Channel Discord, I'm doing intraday updates on this market every single hour, which helps you stay on the right side of the trade and follow the trend of the market. If you're interested in the Stocks Channel Discord, you can find out how to join by clicking on the link in the description of this video. So next up, I'm bringing you a brand new hot stock tonight, and the hot stock that we're going to be covering in the weeks ahead is Shopify, ticker symbol SHOP. I sent this alert out on the Stocks Channel Discord this morning with support levels at 1111, 1079, and 1035. Our first price target was already met at 1135, but we still have plenty of price targets above. The next price targets we're watching for are 1205, 1260, and 1316. If we can break over 1316, there's a nice gap fill, which will bring us all the way up to 1360. So remember, with hot stocks, you're looking to buy off support and sell at resistance levels, and we're looking to maximize the gains in these trades. If we start closing down below our lower support, that will mean it's no longer a hot stock and it's your chance to get out before things get worse. But right now, I like Shopify as a hot stock, so we'll continue to cover Shopify instead of Lockheed Martin. Don't forget, there's going to be plenty more hot stocks on the Stocks Channel Discord, so if you want even more hot stock trade ideas, come check out the Stocks Channel Discord. You can find out how to join by clicking on the link in the description of the video. So thanks for watching, everybody. Remember to stay disciplined and patient in this volatile market. And as always, I will see you in the next episode.